Good morning. Welcome to another Dornbusch download.
40-something.
40 odd, I think. Yeah, we're sneaking up there. Pretty ordinary old day out there too, Dan. But,
Very horrible.
Nice to see a bit of the wet stuff around. But mate, fair bit happening too at the moment. But you've been looking at one of these ETFs that's popped up on the radar.
Yeah, Betashares Australian Dividend Harvester invests in 10 companies out of the top 50, and just really a dividend stripping strategy, I suppose. But annualised out their last 6 months dividend, it comes out at about 11.5% before franking, Michael, so it's not too bad in that regard. The other part about it is they've got a strategy in there to actually hedge against a lot of market volatility by using a third-party company to give them some advice, a company of actuaries. You know, you can see them with their calculators and that's it, the plastic pocket protectors, and off they go. So,
well, it's good to have that sort of safeguard, I guess, too, having a second set of eyes running over the numbers.
Makes a lot of sense, doesn't it? I mean, such a volatile sort of investment when you're trying to do that sort of thing. Pick companies and strip the dividends out of them. If you'd like a copy of the long sec report, you can email me here. We'll see how good April is, or Michael over here. We can shoot that out to you.
Yeah, well, we're certainly seeing ETFs becoming a bit more of a popular way to go, aren't we? People wanting to take that I guess that specific risk out of trying to pick the best and greatest one out there and just basically get
it's a cheap fee structure, Michael. Really, in Australia, we're underutilised in ETFs compared to the rest of the world, especially the US. A lot of financial planners are using those now too. Now that the rules around managed funds are changing a bit, I think they realise ETFs are a good way to do it and able to move people in and out of their investments pretty quickly. So.
Yeah, no, there is, and as you say, the market is building, but we've still got a fair way to go. But a lot of offers out there now. Good way to get exposure to international markets and commodities and these sorts of things.
Very diversified. Agricultural products, gold, silver, government bonds, you name it. We just about do it through an ETF.
No, it does. It opens up the world a fair bit, doesn't it? So, but Dan, too, we've seen a couple of other things happening. Westpac, we've got a lot of shareholders in Westpac. One of the big four banks, number two, in fact, of course. Looking at selling off, anywhere between sort of 20 to 40% stake in BT, BT Investment Managers. A little while ago they rolled or demerged out BT Investment Managers. They still retained about a 60% holding. So looking to reduce that by anywhere between sort of 20 to 30%. So
makes a lot of sense, Michael, doesn't it? Like we saw NAB go to the market at $28.50 to raise capital. It's just another way of doing it with less, dilution.
Yeah, absolutely. And they're talking anywhere between a $600 to $700 million gain before tax. So there's some good dollars involved for Westpac. So all Westpac and BT shareholders, you'll be getting some info out shortly, hopefully next week. Looking like the indicative range for the BT offer is going to be anywhere between $7.50 to $8.40. That's going to a book build over the next couple of days with the institutions. The retail offer is not underwritten, so whatever take up they get, that'll be it. But the institutions have put their hand up for their full allocation.
So any idea of the yield on that?
BT, I think it was about 4% from memory.
So similar to AMP.
Share price performance hasn't been too bad. It has gone into trading halt, BT. The code is BTT. I think they closed at about $8.60. So this offer between $7.50 to $8.40 is anywhere between, say, 4 to 14% discount to that. So if you've got any questions, let us know, and we're happy to throw our 2 bobs worth in. Probably other big news from yesterday.
From the BT to the Bernanke.
Well, we've got Bernanke, but throw in another big hitter from the US, Warren Buffett. Throwing in a few bob into one of Australia's, Australia's biggest insurance company, IAG. They, of course, own the NRMA and SGIO. Lumley Insurance, I think, is in there as well. But Warren, buying about $500 million worth of shares, around about 4% of the holding in IAG. They're also going to set up, a reinsurance sort of arrangement there as well. But, big Woz, of course, he's the, always in the top 5 richest people.
The Midas touch.
Yeah, the Oracle of Omaha, they call him. Worth about $70-odd billion, so the man knows what he's on about.
Yeah.
But interestingly enough as well, he also commented that he could also pursue some investments into the banking sector. And that's why we saw our banks rally up yesterday, and they've continued that trend this morning. So yeah, IAG getting about 500.
Bill rates were off a little bit too, or bond rates, I should say, were off a little bit in Europe, so that might have helped the banks yesterday as well, Michael.
Yeah, very true, and they are very cheap generally, aren't they? So not real surprised to see them kick up a little bit there.
Yes, on the yield, NAB was at 6 the other day, so
yeah, absolutely.
Very good.
Yeah, that's about it, Dan. I think, the Federal Open Market Committee talking tonight on US interest rates. Janet Yellen and her crew of merry men and women. So we'll be hearing a bit more detail about that probably tonight. So expectation is that rates will remain.
They normally go for 2 days?
Yeah, a couple of days. Rates will stay on hold over in the US, but yeah, the inkling is there'll be commentary that we'll soon start to see rises over there.
Yep, very good.
Thanks for listening.
Thanks.